Getting Bitcoin for printed money. Why would you even care about this topic? I'll tell you why. It's because this game is already happening. Everyone who has access to any kind of external fiat liquidity is already accumulating Bitcoin and will eventually be accumulating more Bitcoin. Currently, they have 1.25 million Bitcoin, which out of the total supply is almost 6%. Another 1.3 million is held by the ETF. 2.5 million are stored on exchanges. Governments already do hold more than 1.5 million Bitcoins. I do expect that number to go higher actually in the future. So pretty alarming topic. Thank you. My clicker, yeah. Funny, it looks like a detonator. All right, so getting Bitcoin for printed money. Why would you even care about this topic? I'll tell you why. It's because this game is already happening. It's not a prophetizing the future. This is actually a solid reality right now. And everyone who has access to any kind of external fiat liquidity is already accumulating Bitcoin and will eventually be accumulating more Bitcoin. Right now, it's more on the side of the private sector, but just give it a little bit of time. And there is no better poster child for this game than Michael. Some people like Michael, some people don't like Michael. I'm not here to talk about that. I'm just here to manifest the idea through what Michael did. And that is, he made these various financial instruments that basically allow him, as I said, to get more Bitcoin on his own balance sheet for external capital. And we cannot blame him, honestly. So, can I get the slides on the screen, please? Let's do a small recap. So there are more than 170 treasury companies already. The vast majority of them are publicly traded, and currently they have 1.25 million of Bitcoin, which out of the total supply is almost 6%. But to correct those numbers, actually, around 1 million still remains to be mined. And there are lost coins that account to 3 to 4 million. We cannot really know for sure. And that makes the available supply actually 16 to 17 million. And it actually makes the holding of the treasury companies more like to 7 to 8%. But still, to be more precise, another 1.3 million is held by the ETFs. 2.5 million are stored on exchanges. And funnily enough, governments already do hold more than 1.5 million of Bitcoins. I do expect that number to go higher actually in the future. So that means that the self-custody wallets actually account to roughly half of Bitcoin's fabled supply of 21 millions. And that makes them actually within the percentage of 11 to 12%. So pretty alarming topic. I'm going to borrow a quote from associated with a very famous Czech inventor, and that quote is, "You can disagree with it, you can argue about it, but that's about all you can do about it." And that is actually a sentiment of most people, and who does not have that sentiment, most people who don't have that sentiment eventually start their own treasury company. But in SatoshiLabs, in Invity, we said, no. Let's do something about it. Let's change the game. And so small intro about what Invity is. Invity is a Czech platform. It's from the forge of SatoshiLabs. So Treasury is our sister company, actually. We are Bitcoin-only platform, currently MiCA licensed, so fully EU regulated. And we have accumulation strategies. We have Bitcoin-backed liquidity for individuals and businesses. And we have TurboBuy, and that is what I'm actually going to talk about today. So what is TurboBuy? Roughly, it's a Bitcoin accumulation strategy that allows you to accumulate more Bitcoin over time than if you would be just dollar cost averaging. It works in a way that you have, on top of your DCA purchases, you have 60% higher buying power that is accumulating in your running strategy. And you pay a continuous fee for having the benefit of that extra liquidity. The fee accounts to 9.9% per year, it's charged on top of every transaction that you have according to your frequency, weekly, bi-weekly, monthly. And yeah, it's deducted on each transaction. You can think of it as having 100 units of your own DCA purchases, having 60 more units for the turbo capital, and you pay the small fee from that, raising your buying power to 160%. Right. So in other words, you can think of it as right now, you're paying a small fee, and you're securing more sats at today's prices. So in the future, when Bitcoin is at more favorable evaluation, you can basically get more sats. So fast forward, you can get more sats today at yesterday's prices, essentially. And you can choose to settle that strategy anytime the valuation is favorable to you. Let's say that you just accumulated lump sum of Bitcoin on top of your DCA, and you can just write some of it off to settle the extra capital and pocket extra hard sats, send them to your cold storage. It's extra Bitcoin that otherwise you would not have. Or you can close it actually by extra fiat payment, depending on your choice. So I need to get through some problematic words, because when I'm describing turbo, people say, yeah, it sounds like a leverage. It does sound like a leverage. It also sounds like a loan of sorts, maybe some version of credit, or it has like trades as an option, basically. So I would say, yeah, that's true, but it's not a leverage, it's not a loan, it's not a credit, and it's not an option, because those are heavily regulated words that we actually cannot be using. So we need to be calling it buying power. I just need to get through the vocabulary with you so you are following my drift. Next problematic word is interest. So interest is associated with loans only, so we call interest actually a fee. But you can do the substitute in your head. And we are not calling it a repayment, again, because it's not a loan, it's a settlement. On that note, I have an obligation to show you this slide as a heavily regulated entity that investments in crypto is risky, and now I fulfilled my duty and I can consider that disclaimer being read by you and we can move on. But still, an obligation nonetheless. So, yeah, where's the catch in that? Sounds too good to be true. This is what people generally object, and this is their thinking when they are learning about turbo. So, why would someone just give me money? Why should I pay? Oh, this is a mistake. That should be crossed. Why should I pay a fee this high? Or I can borrow in a bank at much more favorable rate. Or I can even collateralize my existing Bitcoin to get more Bitcoin. Some people are worried, what if they buy at the top? And of course, the forever objective, not your coins, not your keys. Vice versa, sorry, not your keys, not your coins. So let's go through them one by one. Why would someone give me money? Well, surprisingly, Invity is not handing out money. What it does, it is just connecting the demand for a very predictable and stable fiat yield that is attractive to some funds and institutions. And it connects it with the demand for faster Bitcoin accumulation, which is something that almost every Bitcoiner is actually interested in. And why 9.9? It's actually still attractive yield for institutional money. And 9.9 is still pretty cheap, considered Bitcoin's average growth rate, at least how we saw it in the history. Next objection is like, why should I pay a fee this high, like 10%? You know, banks have more favorable rates. So it's actually interesting that the turbo fee you pay along the way has an inverted logic to your typical interest that you would be getting from a traditional loan, because with a normal loan or mortgage or whatever, you tend to pay the highest interest at the beginning, and only once the loan matures, you pay the lower interest at the end. Within turbo, it's actually vice versa. You pay the highest turbo fee just before the settlement of your strategy. That means just before you are actually realizing your profit in hard sats. This is a bit of a nerdy graph, but I would not, I could not look at myself if I would not explain you the magic to be absolutely transparent. So imagine this is like your time frame, and as you are DCAing, it's still a DCA strategy. You are accumulating Bitcoin, and your fee is actually continuously rising. the extra turbo liquidity that you have available is slowly dropping because you're sending DCA transaction, the same money all the time. And the fee is deducted from that. And there is a sweet spot where the turbo fee actually crosses with the extra capital that you have provided in TurboBuy. And that happens after 97 months, which is a fairly long time. Another visualization I have, imagine your purple line as the total amount of money you're buying. Let's say at the beginning is 160 units. And over time, when you cross the threshold of 100 comparison to your very normal DCA that you could be doing as an alternative, and same spot, 97 months, which is actually over 8 years. That means you can play this bet open-endedly for 8 years and just be having that option that you can close and settle anytime in the next 8 years. That's a fairly long time in Bitcoin, if you ask me. Of course, the sweet spot is somewhere, let's say, between 1 to 3 years. If you're a subscriber to the 4-year cycle, depending on your taste, you can basically see there is some like cyclical phenomenons happening on the chart. So I would recommend that 1 to 4 years, 1 to 3 to 4 years is actually the sweet spot for you when you're like benefiting highest from the extra buying power. So another objection is I can just take a Bitcoin-backed loan, like collateralize my Bitcoin and buy more Bitcoin. And on that, I would say, yes, you can absolutely do that. It just have some caveats. And those are that, of course, you need initial Bitcoin balance. Generally, not the time when you want to collateralize your Bitcoin and when you want to be buying more is not always at the same time. If you collateralize your Bitcoin at the bottom of the bear market, it's obviously the safer thing you can do, safest thing you can do. But then, like, the amount of fiat you pull out of it is much lower still. And you are liable with your whole stack, basically, that you lock into it. Not the case with TurboBuy. So let's imagine this hypothetical Bitcoiner, Adam. Let's say he's a whole coiner. Congrats to him. And he pawns his 1 Bitcoin, and he gets a cash equivalent of half Bitcoin. Let's say it's 100 fiat units. And he has 2 options, actually. He can buy in bulk. That means he has to time the market. Tricky thing. I know he's a seasoned Bitcoiner, but still, he just doesn't want to risk it that the price will drop further. So timing the market is tricky. And the other option is that Adam can spread the amount of money over time to do a little bit more dollar cost averaging effect. But he has to state like how long he wants to stretch the money. And for the longer the time frame he actually chooses, the longer the money is idle, and he has to pay the full interest on it all the time because he took out that lump sum of money. So not as favorable, as smooth as something that you can just set off and forget and drop out of your head. Another objection, some people might be friends with the banks. So how did that get here? So we have another hypothetical Bitcoiner, let's call him Carl. And he has a very good banking credit score, so he can take out a loan. So let's assume that he borrows in a bank because he wants to buy more sets at today's prices. So he gets a loan of XY, and let's assume it's for 5 years and 5% interest. So again, Carl can buy in bulk and has to time the market again. But on top of that, Carl actually has to pay the monthly installments on that existing loan. Or again, Carl can spread it over time to mitigate the risk of price volatility. But again, he has idle cash, exactly as Adam, and he still has to pay the monthly principal and interest continuously. So if he were to recreate the effect of TurboBuy and be stacking extra 60% on top of his regular DCA, he actually runs out of that money after 28 months, which is 2.5 years. If you compare that to 8 years, again, 8 years is a much better option on an open-ended bet. Okay, so what if I buy at the top? Well, don't forget, it's a dollar cost averaging strategy. So when the price drops, so is your continuous transactions. Your continuous transactions are buying at much cheaper prices. So let's assume that there was another hypothetical Bitcoiner who was so unfortunate that he actually started TurboBuy on the very top of the last bull market. How would that look like? Obviously, initially he starts a little bit under the water, but the amount of the investment is still pretty low. And as the time goes on, you can really start seeing that the turbo extra buying power is securing net amount of sats. These are numbers after the settlement, after settling the turbo amount, the turbo capital, and after deducting the fee. And it's just a matter of patience, I would call it. Exactly the same as you would do with normal DCA. Again, more nerdy charts from me. So let's say this is absolute appreciation of the portfolio of TurboBuy that started at the very top of the last bull market. So in absolute values, you can see that you are a little bit underwater because it works like a conservative leverage. But over time, you are under the water, but you are still accumulating Bitcoin at much favorable prices. And in absolute evaluation, just a matter of time, if you are patient enough, wait for another bull cycle, you will get there. In relative appreciation, in percentage numbers, you can see it dips quite a lot, but don't forget, it's still like a very little amount of money at the beginning. And even starting at the worst possible time frame, you would end up with almost a year where you can settle and close the turbo and still pocket plus 25% of Bitcoin you otherwise would not have. You can close and settle, send it into your cold storage, and you have extra sets you would not otherwise have. We did some rigorous backtesting on this strategy, and there was actually no case of liquidation on numbers from 2016. We did not go further than 2016 because at the time, the data across the exchanges was actually pretty volatile and the arbitrage bots were not working all that great. But all the simulations we ran were at the least favorable conditions, where you would always buy at the absolute top of the daily price and at the most expensive exchange you would be having from all the available ones. And yeah, and the sells were actually at daily lows. And we also counted it with liquidity across all the major liquidity sources and exchanges, just because you know that sometimes when the price action is very quick, the exchanges can have different numbers again before the arbitrage bots usually leveled it out. So pretty rigorous testing. And the last complaint might be not your keys, not your coins. Obviously, Invity is a custodial app. There's no like workaround that. The accumulated Bitcoin in TurboBuy is working as a collateral for the turbo amount you got available. But Invity, it does not incentivize in any way for users to hold Bitcoin in the app. As I said, you can close and settle the plan anytime, pocket the difference. And we are very good friends with Trezor, so we are absolutely promoting self-custody. This is a reminder for me and all of us that sometimes when people tell you that is something that is too good to be true, it's because it isn't. And it's always good to remind yourself that if you don't understand where the yield is coming from, you are the yield. But on that note, Invity is not claiming to create money out of thin air. It does not promise any yield without explaining where it's coming. It's just an arbitrage between Bitcoiners and trad investors who just want to have more conservative yield and don't want to hold or are unable to hold Bitcoin themselves. Of course, I just want to say historical Bitcoin appreciation outweighs the fee, but historical returns are not guarantee of future returns. So summing up TurboBuy, it means basically you're making an open-ended bet that Bitcoin's average growth rate will be higher than 10%, which for me is actually a very solid bet for me personally. So I would say TurboBuy is a great friend of any Bitcoiner with long-term vision who is interested in accumulating more sats. Thank you. Stop at our booth. We have a promo code for your first strategy where you get 60 euros in 10 recurring transactions if you want to try it out. Come to our booth to talk to us. And let me just close by quoting a classic. What do you get out of it? Well, you get the ice cream, the fudge, the bananas, and the nuts. Right now, Invity gets the sprinkles. On the settlement, Invity takes back the cherry, but you get the sundae. You get the sundae. Thank you.